Hi, this is Charles Kelly, Money Tips, author of Yes, Money Can Buy You Happiness, bringing you money tips to help you save, earn, invest, accumulate, and enjoy more money. I want to talk today about the World Prosperity Index, brought out by an institution called Legatum, and they publish this Prosperity Index every year, and it's really very interesting because it's not just based on the GDP of the economy and the size of the economy. Otherwise the US would be top every year and China would be second, but they're not. This is based on a wide range of things, from healthcare, education, freedom, and lots of different things. And it's no surprise again that Scandinavian countries have topped the list. Because they have a very sort of democratic system, they have very good education, very good housing, healthcare, and so on. And Denmark are top, then Norway, Sweden, but Finland are up there. Lots of other sort of Baltic states are up there as well. And this is very interesting. UK slipped from 11th place to 13th place, despite being the 6th largest economy in the world. We're actually behind Ireland now, and I remember when I was a child going to Ireland, and Ireland was a lot poorer than the UK. And now they're a tiger economy. They've got all these tech companies in Dublin. But I can remember a very different time in Ireland when they were certainly way behind. Now, the world's biggest economy, the US, only came in 20th, and they are behind a lot of countries you'd be surprised to see. And China, the number 2 economy, only coming at 54th, behind countries like Panama and Georgia. So that's surprising. But as I said, it's not based on just the size of the economy. If you look at the average GDP per person of a person in China, it's lower than the UK. We would top the charts if we'd be higher than China in those charts if that was the basis of GDP per person. So you've got to look at the whole wide range of things. And obviously in America, healthcare system, if you haven't got insurance, if you're unemployed, then you're in trouble there if you haven't got the right health insurance. And even when you've got health insurance, that can run out. And if your cancer treatment is ongoing and the insurance stops, that's it. You're out of the game. Now, look, plateauing has caused there has been a plateau of prosperity due to what's been going on the last couple of years with COVID and lockdowns, etc. And the other significant fact is that freedom. They've measured this in over 100 countries, that freedom has been reduced in over 100 countries. That includes things like freedom of speech, accountability of politicians. So that's another interesting phase. That's an interesting trend. Freedom has been reduced over 5 years in 100 different countries. Also, another significant factor is the rise of Africa. We are seeing a fall in prosperity, only slightly in the 2 most prosperous regions, North America and Western Europe, but we're seeing a rise in sub-Saharan Africa. It's still got a long way to go. We're also seeing a rise in Asia, of course. Now, you can check out the full rankings and lists on a link that I'm putting up there for the Legatum Institute, but very interesting. Now, the cost of living in the UK has risen at the highest rate for over nearly 10 years, as inflation hit 4.2%, as we predicted on Money Tips a couple of months ago it would do by the end of the year. And that's more than twice the Bank of England's target rate. Now, interest rates, I think, will rise in December, if not January, if they decide to hold back before Christmas. This is after the bank's Monetary Policy Committee held out on rising or hiking interest rates in November at their meeting, but they have a meeting every month, so it could rise before Christmas, but will they? I don't know. Inflation is really getting out of control across the world. Germany, America, Turkey, where it's officially at 20%, but unofficially at 40%. And so there's big problems around the world. We're seeing money printing on an industrial scale, and the fuel and commodity prices, oil, gas prices reaching sort of record highs. That's going to cause a lot of problems for people this winter as we go in, as fuel prices rocket and the value of their money goes down. If your money's in the bank and inflation is rising at sort of 5%, 10, 12 years time, your money is halved in value. So you've got to look at that. If this compound effect of inflation, I might have got that 10-year figure incorrect, but the cumulative effect of inflation is devastating on savings, especially if your money's sitting there in the bank earning zero. But I'll talk about that again in a second. But the markets are a little bit jittery. Markets fell, or they're certainly falling slightly today. Gold, cryptocurrencies are doing well, maybe on inflation fears. Joe Biden has his $1.7 trillion, not billion, $trillion spending plan has been passed by the US House of Representatives. It's still got to go through the Senate, but we'll have to see what happens. But the UK and Japan have also announced significant spending plans. Japan, I think, 350 billion to revive their economies. Japan's economy is flatlined, basically, and it's going into sort of a negative. Other significant news is that, I talked about cash, right? I talked about earning nothing on your cash for years. Now, I don't know if you saw an interview recently. I watched an interview with Warren Buffett and Charlie Munger, and they were asked why they'd not put the cash that they're sitting on into index funds over the last 10 years, because they would have made over 100 billion more than sitting on cash. And their answer was simple. They said it's all very well looking back with hindsight and saying, well, we would have made more in the index funds, but we are cautious investors. We don't want to lose money. That's the rule one investing. Rule one, don't never lose money. Rule two, don't forget rule one. And a lot of their shareholders are retired people with a significant amount of their retirement funds in Berkshire Hathaway stock. So they don't want to lose money for these people. And, Charlie Munger also said, well, look what happened when Harvard did that. Harvard University, they put all their money into the market at exactly the wrong time. That caused them to suffer for many years. And he just said, we're not going to change. And everyone laughed because they're not going to change. But they're not stupid, these guys. You might think that, they're over the hill. Some people are saying, well, they're not good investors anymore. They're falling behind. They're 90 years old. They're not with it. They're not with it in cryptocurrencies and technology. But they are safe investors. And what Warren said was that every 20 or 30 years or so, maybe 2 or 3 times in that period, you're going to get an opportunity where you'll get a market crash. And he calls it raining gold, where you just have to go outside with a bucket and gold will fall into your bucket. That's a metaphor for saying that when shares slump by 70%, as they do in a stock market crash, that's the time when it rains gold. And you can go in and pick up shares, including their company, at maybe half price. 70% off, a genuine sale, because the market will fall. When markets fall, everyone falls. There's a massive sell-off in blue chip shares by index funds, by funds that are run by artificial intelligence. They sell off, and that's the time when Warren and Berkshire Hathaway will swoop and pick up those companies at sale prices. So if your money's sitting in the bank and earning nothing, but you're planning to go back into the markets, that's great. But you don't want to leave your money in the bank forever. That is a significant risk against your money. You've got to find somewhere to put it eventually. But I'm also a cautious investor like Warren Buffett and Charlie Munger. I'm waiting for the right time to invest, not just piling into the market when the stock market's at a record high, when PE ratios, price to earning ratios, are at record levels. I'm not going to go and buy stock at that sort of prices. Yeah, Amazon stock is great if you bought it 10 years ago, but I wouldn't buy it at this price now. And I'd wait. If it came down in price, then yes, of course, you'd want to buy Amazon stock and Apple stock, but not at these prices. So that's the way I see it, and that's the way Rule 1 investors see it as well. Now, talking about Amazon has stopped taking UK Visa credit cards just for payments in the UK. This is because Visa have hiked up their prices after the UK left the European Union. And, you might say, well, it's only the UK, but this could cost them hundreds of millions of dollars, Visa. And that's why their share price slumped, I think, by 6 billion the other day, because this could be the start of a price war, a disruption in the payments market. And look, Visa have got 80% of the market in the UK. Maybe they've had it good for too long. We're now seeing other forms of payments coming through, not just crypto, but think other ways of paying money and Facebook have looked at this, Apple have looked at this, and I think things are changing. Visa have had it their own way for too long. And Amazon are even offering £20 to people to switch from Visa, maybe to their own credit card, a MasterCard. Interesting. But you also look at things like their plans to debit people's accounts directly rather than going through the payment card system. And that's interesting. But also for smaller traders, like little takeaways in the high street, they've had to start accepting credit cards and debit cards recently. They didn't want to do that, but we've had this since the COVID situation, we've had a move away from cash, and that's hit smaller retailers. It affects their profits at the end of the day. Amazon can survive this, but smaller retailers, I think we should bring back cash. I like cash. I like to have cash in my pocket. I like to do what I want with my money without everyone knowing about it. I'm not doing anything illegal with my money, but I like the feel of a £50 crispy note. I like cash. So let's bring back cash. That's what I say. So let's see what happens with that. But I think you could see a big disruption in that payments market in the coming months. Property prices eased again last month in the UK, which is normal for the time of year, people say, but there has been a bit of a decline. China, we've seen a big decline in property prices, and the US, where I can't remember the name of the company, but they buy a lot of properties in America. They've apparently bought them at too high prices. So we could see regional falls in property prices and maybe a slump in parts of America because the market is overheated there, as has the stock market. And we're seeing the same thing here. The market is definitely overheated. I wouldn't be rushing out and buying properties unless I could get a really good deal at the moment. So that's my view. Other significant facts is that Alibaba, that big Chinese trading company, slumped by 10%. Why? On profit and sales forecast warnings. They expect to see a reduction in sales. And this has been the darling of the stock market over there in China and Hong Kong. So interesting to see what's happening. You've got to look at these trends around the world and try and think, where is this going? What are we seeing? Are we seeing a return of a recession if interest rates go up? I think we are. Are we seeing a fall in the stock market if interest rates go up? Yes, I think we are. And property. But I'm not your financial advisor. I'm not telling you what to do with your money. You need to take your own advice because I don't know your individual situation. Other significant factors, Austria, and this is in the news, it's not some conspiracy theory, but Austria has become the first country to introduce mandatory vaccines, and this is prior to going into a full lockdown. You can check that out on BBC and other channels. And that's what's going on in the world today. Now, other stories I've got up there on my YouTube channel, how to generate leads on LinkedIn. I talked to a really good expert on LinkedIn lead generation. Now, a lot of people on LinkedIn are business people, professionals, and a way of generating leads and getting more sales on LinkedIn must be worth listening to. So have a look at that. I also did a broadcast on the 9 habits to develop extreme productivity. Simple things you can do to increase your productivity. I also talked recently about the thousands of migrants every day who are coming across the English Channel who've decided to bypass the normal ways of entering the UK and just turn up, claim asylum, and then they're put into 4-star hotels and given money and free mobile phones. This is because they're treated appallingly in France and other European countries. But it seems like the UK is the magnet. Priti Patel has promised to do something about it, but I'm not sure what she can do with all of the human rights laws that are around. I also look at the situation in Belarus, that growing problem there. And also talk about on my YouTube channel, the buy-to-let demand down 60%, says a London estate agent recently I talked to. Now remember, I'm not your financial advisor, but financial education is the key to success. It's the key to building wealth, keeping wealth. So never stop learning. Keep looking at my free podcasts on your iTunes, on YouTube, Facebook, whatever. Keep checking them out and like and share them. Please press the like button, the share button, whatever it is, so that this can get out, this free content can get out to more people. And also, do check out my book, Yes, Money Can Buy You Happiness, which you can get on Amazon. But if you're in the UK, you can only use a debit card with Visa, not a credit card. There you go. And if you want to find out more about how to become financially free without working any harder, how to generate passive income, find out more about property and becoming financially free without working harder over time, look at my free on-demand training. I'll give you a special gift that can transform your finances immediately just for watching the video. Check it out. Click on the link below. I'll see you soon and have a great weekend wherever you are in the world. Stay safe. Thanks very much. Bye for now.